Good morning, nieces and nephews. I hope you guys got your coffee ready. It is Monday, and it's another time for us to take it to the market makers because you guys already know they're going to try to take it to us. All I got to say right now is that the Bears have been getting smashed, all right? And one of the ways using the charts, because that's where the most important stuff is, using the charts, one of the ways I look at it to know, like, how do we know we're bullish, is I like to use the 5-day moving average. Okay, you guys see the red line? When the market is really bullish, it spends a lot of time above the 5-daily moving average. Okay, it spends a lot of time, and there'll be times where it go below the 5-day moving average, but the recapture is usually a buying opportunity. And when it's bearish, it spends a lot of time below the moving average, and vice versa. You guys get the picture, okay? So when we look at what the SPY's been doing these last few weeks, or last couple of weeks, few weeks, it's been spending majority of its time above the 5-daily moving average. Okay? The big money players, they've been pushing this market up to new all-time highs. And you guys, if you guys been paying attention to my option flow section of my video, you guys saw how much puts were being bought, and the market makers were not trying to pay none of them. Okay, they put it up to new all-time highs. So what's the plan next? Okay, as of right now, SPY closed. As of last week, SPY closed and continued to stay above the 5-daily moving average, the 5 DMA, which tells me that it's still overall bullish. Okay, it's obviously, I'm not basing that as bullish solely on the 5-daily moving average, but it definitely influenced my thought process. Okay, and as long as it's above the 5-daily moving average, it's going to continue to be bullish. Okay, because that's what the tendency of the market is. We got to intimately know SPY. All right, but it doesn't mean it's going to stay bullish, because there's always the chance that we get the pullback, okay? And if it is, the first thing that bears need to do is get price below the 5-daily moving average. So I encourage you guys to add the 5 moving average. I put MA, okay? Moving average, right? To add it to your chart, because if SPY loses it, a lot of time the start of pullbacks, like look at this pullback we had back in mid-July. A lot of time the start of pullbacks start off by turning that 5-daily moving average into a resistance by breaking it down. Okay? By breaking it down. Alright? So watch that 5-daily moving average. And the best way to watch it is to combine it with other forms of levels, right? Of forms of support resistance levels, right? And you guys know I love to use the Fibonacci levels, okay? And I do have a Fibonacci level at 1.236 is at 570. All right. So while I am watching the 5-daily moving average, I'll be watching that 570 level, fib level, and if it breaks down, that could be the start of a pullback. And bearish follow through would be to also, because we had some buying pressure last week around the 568 level multiple times. So breaking down 570, 568 should trigger puts. Good for some level-to-level trades, guys. Good for some level-to-level trades down to 566.5 and 565. Could get the back test, okay? Because 565 was a previous all-time high. Breaking down 570 could give us another back test of that previous all-time high. Maybe even down to 563.5 is because there's a gap down there, okay? Those would be targets, and that would be a good $5 to $6, $7 move. That would be good for puts. But if we're talking a bigger swing tradable move, then certain things need to happen. If we're just strictly talking levels, 570 and obviously 565 need to break down. But we got to look at the context, because a lot of times what the bears really need is like high volume selling pressure. When you look at the previous times, like the volume started to increase. You look at the days that led up. Like, I don't know if y'all can see it. No, I can't make this bigger, but when you look at the volume of the days leading up to the top, you see that when the top came in, the volume started increasing a little bit, okay? And then the bodies You look at the bodies of the candle, okay? When we're talking about increase in volume, we're talking about comparing to the days leading up. And you see the increase in volume, and then you see the body of the candle. Is the candle big? Okay, because a lot of time when there's low volatility, the candles be small. The range of the price is not that big. So you look at the size of the candle, they're usually big. Stuff like that, those are signs. False breakout setups are great, but you got to look at the context of the candle and the volume and all that. Those all add to the influence. Is this truly a top coming in, or are we going to get a multi-day pullback? So watch how it breaks down the levels as well. It's usually good for a level move, 51% plus of the time. But if we're talking a swing tradable move, just watch how it breaks down, okay? But overall, those are the levels that need to break down if we're going to favor a pullback, all right? If the market decides it wants to go up, it might not go up right away. It might not go up right away. It might consolidate a little bit more. But overall, 570, and especially that 5 daily moving average, you want to see it hold as support. And as long as above it, that's a sign that, hey, the market could be consolidating to try to build strength for a higher move, a higher high, a new all-time high again. All right. And I have resistance at 572 and 573.6, 575, 576.5, and 578. Those are my upside targets. So as of recording this, SPY is around 570.4. So it would need to clear 572 and 573.6. That's a fib level to give us more upside. Okay. So overall, bullish above the 5 daily moving average. Please add it to your charts. And below it and breaking down 570 could be pullback time. All right. Triple Q will approach it with the same. Okay. You guys can see that Triple Q spends a lot of time when it's bullish above the 5 daily moving average, right? And when it is bearish, it spends a lot of time below the 5 daily moving average, okay? So last Friday, what happened? All right, SPY gapped up and went a little bit too high. It overextended itself very far from the 5 daily moving average. So it had to pull back a little bit, and you guys can see what happened on Friday. That it retested that 5 daily moving average as support. Didn't get the breakdown, but it definitely tested as support. And it paused around that area. So where's the 5 daily moving average right now as we speak it? It's around 486 as of last Friday. But Triple Q is obviously below that right now. Okay? So if we are to be bullish, you want to see Triple Q get back above the 5 daily moving average. Okay? So today's video is dedicated to the 5 DMA. Please add it to your charts so we can trade it together. And, not together, but y'all know what I mean. So overall, to be bullish, it needs to get above the 5 daily moving average. Okay? I do have a resistance at 487 and 489. So adding those levels, using those levels to help you influence. Get above the 5 daily moving average, clear 487 and 489. That should be bullish, and we could get a move to the upside. 491, 493, and 495 would be in play. If we get below the 5 daily moving average, we know, hey, this is not a good sign. If Triple Q can't get above the 5 daily moving average, usually when that happens, more downside is coming. So where's next support? Next support is at 485. So it's below the 5 daily moving average, and it breaks down 485. That's a good sign. Hey, we could be pulling back a little more. 483.5, 482, 480, and 478.7-ish would all be targets of mine to the downside. You guys want to play it level to level and leave runners. So if you break down 485, you want to take most profits at 483.5, maybe 482, depending on how strong the move down is. But you play it level to level, and you use your runners to catch the bigger move, okay? Let's move to NVDA. NVDA, where's the 5 daily moving average at? Okay, it closed just above it last Friday, but guess what? It's way below it today. Okay, so overall, if bulls cannot recapture the 5 daily moving average, that's not a good sign. That's actually a bearish sign. So bulls today need to get above 120 and get above 121. 122. 120, 122. If they don't do that, combined with staying below the 5 daily moving average, that's not a good sign. That's a bearish sign. Looks like they're gapping down. Okay, next support's at 118 and 116. If we break down those support levels, especially below 118, I would be bear bias. Okay, we are going to pull back a lot more. And especially with the context of NVDA tested my multi-month downtrend line for the third time, and we're rejecting, guys, that looks bearish to me. So breaking down 118 and 116 would be bearish follow through. I would be bear bias, okay? Trust no bounce unless we can recapture 120 and 122 to put 123.5, 125 and 127 in play. Guys, remember to remain unbiased. We are sheeps. Tesla has been looking bullish. Let's take a look at the 5 daily moving average. See, last Friday, Tesla bounced right off the 5 daily moving average, okay? It has an inside candle setup too. So the preceding candle's range, the mother candle's range is 251.5 to 261.7. Okay, anything in between is noise. If Tesla wants to remain bullish, okay, it's already bouncing, it's continue to stay bouncing above that 5 daily moving average, good sign. Bullish fall through, it needs to clear 260 and 261.7. We can round it to 262 because that was my resistance level. Okay, above 260 and 262, I am bullish on Tesla. All right, 264, 265.5, 267 would all be targets to the downside. Okay, if we're going into the downside, if it, those are targets to the upside. If we are going to the downside, then as usual, support levels must fail. Okay, I have 258.5, 257, and 255 as support levels. But guess what? The 5 daily moving average is at 255. So that's a very important level to watch, 255, because below it would be bearish. Above it, we could be consolidating, but above it, bulls would ultimately definitely have a chance at more upside. The odds would be in their favor. Does that make sense, guys? All right, we're going to give IWM a break. Sorry if I disappoint some of you guys, but I'm really liking the way coin looks. It's a very volatile stock. I want to give you guys something cool to trade. As of right now, coin is gapping down. Okay, last week it closed at 191.2 and it gapped all the way down to 184.5. Could this be an exhaustion gap? We're gonna trade it. All right, so let me give you guys some levels and ideas. All right, so I got to get my fib levels in, okay, based on September 6th low, and September 6th low is at 146.12. All right, so we'll put 146.12. Y'all know how I do. And then last Friday's high was at 192.45. So we'll get that, right? Boom. So it's gapping down around 184.6 right now. And I have the next fib level at 181.5. So I got next support at 183 and 181.5. If this exhaustion gap, potential exhaustion gap, if this gap down continues to be a crap down, those next support levels must fail, 183 and 181.5. If they fail, bearish, with what's this pivot low around here is 179.5. I would be targeting that pivot low. All right, 183 and 181.5 fail, 179.5 would be in play with 178. Okay, 176 and 174.7 as the next target. Make sense, guys? All right, if we are going to bounce based on these two candle lows right here from August 28th and August 29th, we see not once but twice there was a weak bounce around there, and it came in around 187.7-ish. Okay, so next resistance at 186 and 187.7. If those levels clear, then maybe we can get a bounce up to 189, 191, and 192.5. Those will be my upside targets for coin. Guys, this is a volatile stock. I have a good feeling we could get some good trade setups intraday with this stock, even swing trading. All right, so give it a try. And before I go, let's take a look at some flows and dark pool levels. All right, before I go, let's take a look at some flows and dark pool levels. This is from last week. Gotta put it for last week, the 27th. What were the levels? 571.5. 53% of activity came in at 571.5. We had a good amount of activity come in at 572.29. That was $2 billion in premium. Okay, 572.29 and 571.57. Triple Q. Guys, we can use these as pivot levels, support, resistance levels. That's why I give you guys a dark pool level, because that's where big money's getting busy. Okay, you can add them and label them differently. Majority activity for Triple Q came in at 489.45, 66%. The other 23% came in at 486.75 for what it's worth. Okay. NVDA 121.4. All right, definitely getting above that would probably help the Bulls case. Overall, possibly bearish below. Then Tesla 260.46. 93% of activity came in there. Okay, guys, add that level to your charts. Coin 186.5. Oh, it's below that. Yeah, coin's gonna need to get above that if it wants to get anything going. Let's take a look at the option flow though. SPY. My filters are gone. 100K premiums or above. Looking for only above the ask. Sweeps and out the money. And it's overall bearish once again. Okay, last week it was bullish. Y'all remember last week when it was bullish? And then what happened? Even though we had SPY closing at all-time highs, it actually pulled back intraday. So we saw some pause to the bulls momentum. We saw some profit taken intraday. It was still technically all-time high, but the problem was it closed to it gapped up. So the selling pressure came from new all-time high levels. But you notice how it was bullish, and then we started getting those red candles. But now look, it's back to bearish. 9.6 million inputs compared to 1 million inputs. Very lopsided, guys. Let's take a look at the puts though. So today's date, September 30th, last day of September today. Okay, guys, and we're seeing a lot of these puts coming in for mid to late October. Got a few here for early October. Okay, none of those are expired. And as far as the calls go, say October 18th, November 15th. So a lot of these calls also have time on it. September 30th, September 30th. So those are going to be expired today. So yeah, very lopsided in favor of puts. And I wanted you guys to remember, it shows that $9.6 million people, worth of puts were being bought. But for them to buy, somebody had to have sold. So we got to look at it from both perspectives. Very important we do that. Okay, guys? Triple Q, bearish as well. Some of these puts, well, this one's expired today. And these calls are for January 17, 2025. Very, very far out. And I put out the money, but these are barely out the money. Very lopsided. 800,000, a little over 800,000 for calls. Over 5 million for puts. You guys see it for yourself, guys. NVDA, bullish. Overall, October 4th, October 18th. For 122, 125 strike price. They might not be happy right now. Somebody bought puts last week, but they bought same day put. They should have put some time on their puts. Maybe they would have made some money. But I don't know. I'm not them. October 4th puts. This person might be happy. See, they put a little bit of time. They put a little bit of time on their puts. They got it last week around 120.5. This person might be a little bit happy. All right, just put a little bit of time on your contracts, guys. Don't do that 0 DTE stuff. Unless you're really comfortable with it, Very bullish. 5.9 mil for calls compared to puts. Barely over 400,000. A lot of these calls are short term. A few of 4 of them already expired from last week. But a lot of these have time. Wow. So be careful. Like, it's very lopsided right now. Be careful if Tesla decides to pull back even more. But you never know with these things. You never know. And let's take a look at coin. And nothing for coin. All right, thank you guys so much for watching my video, guys. I really appreciate you guys' time. If you guys want more content from Uncle Charlie, definitely consider joining my Discord. I'd love to serve you guys at a higher level. Peace.